Welcome back to episode 23 of Crypto My God. This is Graham here, coming to give you a download on what just occurred yesterday. One of the biggest project launches in crypto for, I want to say 2025, but since we just got started, I'm going to more lump it into this entire cycle. Now, Berachain was a very well-funded, we would call it a VC-backed coin, aka took in a lot of capital privately, and it used that to develop something pretty broad and pretty robust. I do want to note that when you are building a new L1 or a base layer, there's a lot of heavy lifting that needs to be involved. So a lot of developers coming in, whether that be the consensus mechanism, the wallet itself, all of the primitives like swap marketplaces, AMMs, DeFi, those things. And Berachain took a really interesting approach. So let's just get right into it. Now, one thing you'll note right out of the gate, right? Berachain has really nice branding and marketing. This is one of their core concepts. Every presentation that was given at conferences by the Berachain CEO, he wore a bear head, a stuffed animal style thing right over his head, added a lot of really fun marketing, branding, and awareness. This is a world where you can't really do Google search SEO, so any sort of organic marketing campaign is extremely effective in the blockchain ecosystem. Now, you're looking at it, obviously, called Berachain, taking on the format of a lot of bears. They have community members, the bear baddies, all sorts of fun things like that. But what is Berachain, right? Why are we even looking at this? And I'm going to go to their website to answer that, because what is Berachain? Now, it all revolves around this concept, proof of liquidity. What they're trying to solve is they looked at traditional ecosystems like Ethereum, and they said using the gas token to vote for governance, like this all created an alignment or a sort of misalignment with all of the industry players. So the cool thing is proof of liquidity is a novel economic mechanism that uses network incentives to align incentives of ecosystem participants and bolster application layer alongside chain security. So they're looking at securing the chain, which is something that's done via proof of stake. People put up a large chunk of value in order to add security, basically saying that if they do something malicious to the chain, if they push false transactions, if they try to mess with the queue of the flows, there will be a slashing event. So all of that capital that they put up to maintain security, if they do something that makes the chain less secure, they will get slashed. They will lose some of the value in the stack that they're holding. Now, conversely, if they add security, if they maintain it, there's just ways to reward, earn yield on that stack, and value accrual mechanisms take place. So what's really interesting is that they broke it down into two tokens. In the sense of Ethereum using ETH for pretty much everything, Berachain comes in with the proof of stake model. It is two tokens. Bera, which is, you can think of it as ETH for the gas. It's what you use when you pay each transaction. A little bit of Bera goes. And of course, the Bera asset is flowing through the feature sets of the ecosystem, right? If I want to trade one asset to another on Berachain, I will be paying a small fee in Bera. Then there's BGT. This is an interesting concept, and this is a reward asset for putting other assets at work. Let's say you put Bera into liquidity protocols on an AMM, on a decentralized exchange. Let's say you put Bera to back lending borrowing programs. Anywhere within the application stack where they need liquidity to build a product, Bera will be accepted as one of those liquidity features. Could also be, stable coins. It could be ETH. It could be a variety of what we would call exogenous assets. But when you do that, when you earn for your contributions inside the Berachain ecosystem, you get BGT. And it says this is a soul-bound governance token distributed by validators for proposing new blocks, which ultimately rewarded to users providing ecosystem liquidity. Now, a soul-bound governance token is interesting. What this means is that when an account earns BGT, it cannot be sold. It cannot be moved from that account. Soul-bound is a concept that means when a token hits a wallet, it is locked in that wallet. It cannot be moved to another wallet. And this is used to, again, reward people who are participating, active participators inside the ecosystem. We have a bit of the image here on the proof of liquidity. And basically you have, here's the Bera asset and stakes gas token into a validator node. Validator nodes are all providing the compute for transactions, right? They're validating transactions. So you take the gas, and this is standard proof of stake, right? You're going to find a node. It's going to offer you a certain yield. And traditionally speaking, the better the node, whatever value it provides, maybe it has a higher yield. In many ecosystems, that yield is sort of flat. Berachain is trying to incentivize validators to have a bit more of a competitive ecosystem, and that is how their yield is going to alter. So the validator nodes direct their reward emissions to what's called a vault, and the vault is what allows people to basically earn different rewards. The vaults are what output the BGT, the governance token, to different wallets. So if you stake gas into a validator, it will earn BGT. It will in turn put that back out, and that will come back to your staker. So there's all sorts of ways to use your gas or your Bera token, whether that's providing liquidity in an application, whether that's putting it into a validator node for proof of stake yield to earn the governance token. Now, governance, this is interesting because it means that the people that are voting on the upgrade of the chain, the governance of it, right, whether this be leaders in certain committees or upgrades in the code, this is only people that have now contributed to the ecosystem, right? You can't go onto an exchange and just buy a ton of BGT. You have to get it through the rewards vaults inside of the ecosystem, again, by providing liquidity, by validating the network. There's an increasing amount of ways. But what's important, again, the governance token can only be earned. It cannot be sold. Now, quickly, one thing we have to look at are these rewards vaults, because they're pretty flexible and they're one of the more interesting contributions to the network. You can see that if a user here staking in a reward vault, right, you can earn the asset BGT through a variety of ways. Let's say a application wants liquidity. It wants a lot of stable coins to simulate the way an exchange might have a big pile of cash in the middle. A digital yield-bearing asset will require a lot of underlying capital in order to move that value around to generate said yield. So you could contribute stable coins. They're a great asset because obviously they hold their value. There might be other ones, maybe governance tokens and things like Aave, really like truly tried and tested protocols. Those fluctuate, but there's also a variety of stable coins. And they have their different approaches and their different value sets. So if you stake that, you might earn BGT as a reward. And this is sort of how we look at it, is that a user could take something. Uga is another asset in the one of the applications in the ecosystem. And if this reward vault is basically trying to accrue as much Uga as possible, a user puts in 10%. The validator will earn for running this reward vault or pushing their assets towards it, will earn some BGT. And you can see this user contributed 10% of the total reward vault. They get 10% of the BGT earned. So anyway, what this does is create a very positive flywheel between the people that are validating to a validator and the reward outputs of that validator. So generally speaking, the relationship has been that validators, they have to do work. They have to run machines. They have to maintain uptime. They have to pay attention to the updates and keep the validators at the latest and greatest speed. Also, they want to target an uptime of 100%. Now, no one ever does it. They could do, 99% uptime, but this is how the network functions, right? The validators have to be validating blocks, approving the transaction. So it's very important for them to be running the latest set of code, to be extremely responsive, to be geographically distributed, right? You need these access points around the world. And this is how they're incentivizing them to earn participation inside the ecosystem. So validators can actually look at different reward vaults. Maybe we don't like Uga, maybe we like something else. And that might incentivize users to stake their Bera to a different validator. This is when we get into the competitive mechanism of the validators. There's a lot of game theory here that they can use to incentivize users to stake to their validator set. As such, their yield output might change, right? If they're working with applications versus the base security of the chain, maybe they can generate more yield. Again, more yield might mean more risk. So users have the optionality in this marketplace to figure out where they want to put their underlying stake of Bera, the gas asset, the thing that makes the whole network churn. So really, they're just looking at the security mechanisms of traditional blockchains and saying, hey, can we create a flexible marketplace in some of these key players? Can we find a way to better reward the people that want to support the latest and greatest applications? There's a lot of interesting mechanics here in how it is viewed. One interesting thing about BGT, since you have to earn it through the network, there's a variety of ways that you can use it to earn more assets. Now, you can swap your BGT, since you're obviously earning it and you can't sell it out of that wallet. You can take the wallet that holds it and you could swap it to Bera, right? Saying, I'm not really interested in participating in governance or anything like that. I just want to cash out into the gas token. And if the Berachain network goes up, hopefully the value of the gas price goes up. So you could just exit your position and try to cash out. Since it is a asset that reflects people's actions inside the network, right? You have to be a participant to get it. There are some interesting pools where maybe you could use it to pool against a application's native asset and earn yield in that. There's the reward vaults that you can just use it to support rewards inside a validator, and validators themselves might be using BGT to do that, right? To increase the rewards from their vaults, to increase the people or the APY and the amount of people that contribute and stake to their vaults. And last but not least, there's Boost, which is, again, you can boost a certain validator's APY. Basically, they're saying if a lot of people have confidence, they'll put their BGT into the boost mechanics, increasing the validator's prominence in the proof of stake ecosystem, earning more rewards. So a greater community behind a validator, a bigger boost, and they're offsetting the fact that they could swap that BGT for the gas asset Bera, right? They're committing to boosting this validator because they all support it. Again, they're taking the product of their work, which is BGT, and using that to signal to the ecosystem. So it's a really interesting mechanic. There's almost a proof of work concept because BGT is soulbound. You have to earn it through the liquidity layers. Now, proof of work is not the consensus mechanism, but you do have to work to earn here. So that's a really interesting concept. All of this is inside of their website if you're looking to learn more. Now, that's the core function of Berachain, and that's really the thesis that's breaking away from a lot of what Ethereum's been doing. I should have said this right out of the get-go. This is an EVM chain. It works with the Ethereum virtual machine. So anyone that's building applications on Ethereum, they can port them over here. Pretty straightforward and easy. And what does that app list look like? So right now it's basic things, like they have a stablecoin inside the ecosystem called Honey, where you could mint or redeem it for a USDC or a USDT. Now, why would anyone want a stablecoin inside their ecosystem and not just USDC? Well, the fact is stablecoin flows produce some fees people have to pay. Having it inside your own ecosystem just gives you a lot more control. It gives you a lot more revenue capture. You're no longer having to pay USDC or some alternative platform for the trust of their stablecoins. In Honey, it is backed one-to-one. So this is using a basket of USDC or USD, the new PayPal asset, or even treasuries can be added to this. And of course, they have a token bridge, an NFT bridge, the general scan platform, so the explorer to watch and to review transactions as they go. And these apps are just going to open up even more. Now, all of this being said, Berachain was one of the most hyped. They did a great job on marketing, and they did a great job raising capital. So the industry has been looking at this as, what is the performance of a token that raised all this venture money, that built all this hype? And how can we look at that to reflect sort of where our market is at, right? Now, it did launch at a pretty high valuation. And when the token came up, and I think I woke up an hour later than the launch, it had risen to about a $14 billion market cap. And you can see that ascent here, right? The initial launch price and the initial pump. And this is something that is generally, you work with market makers, you work with hedge funds to try to secure a floor, to give them reasons to buy it, whether that be through trades of locked tokens or a variety of reasons. But you get partners on board to try to support a price. The goal is that the market will generally discover the true value of an asset. And you want to make sure that that volatility is minimized in the discovery process. So you get partners called market makers. They supply more bids, more asks. That's basically the order book. So if you go over here, you can see the trades that are happening. And you really want people to have these fills. You can see that there's small amounts, right? This is 8.251, 8.252. You want to have padding in the market so that if someone comes and sells, it doesn't just create a huge candle. This is how you minimize it and sort of flatten out the volatility. And you can see lots of buys initially and it starts to sell. Now a day after launch, it's had some time to settle. And guys, I wouldn't call this pump and dump. This is really price discovery. You have a lot of hype in the beginning, which causes the pump. And this isn't as much a dump. They airdropped about 15% of the tokens to the community. that provides a lot of liquidity, again, minimizing the price discovery and the volatility. But what's happening now is you have the initial excitement weighing off, and the market's really trying to establish what it would call a floor or a true price. So we're now at $8.24. If we look at that, that puts us at just below a $1 billion market capitalization. This number is actually reflective of the tokens that are in circulation. If we took all of the tokens into account that will ever exist, that puts it at about a $4 billion market cap. So we were at more than twice that yesterday in the initial discovery, but this is still a really nice amount of valuation. And of course, the volume, right? How much is being traded? And that's 1.41 billion. So that's insane. This chain actually did a lot of value for, obviously, I'm looking at Binance. So with $1.4 billion in volume, and they take fees on the buying and selling, very good for the exchanges. Now, when we go to the chart, you can see that it's, starting to curve up, and people are looking, is this a time to buy? And what is the price going to flatten out as the market continues? So I'm going to move over here to a perpetuals market. This is hyperliquid. And one thing I'd just like to look at, so in the Binance chart, we're looking at really spot purchases. These are people trading it and buying it. But over here, this is all leverage. That's what a perpetual is basically trading on leverage. And what we see now is that the funding is actually negative. Now, what funding means and why it's important to look at is that a negative funding means that people are generally net short, and that the price on the perpetuals market is a little bit under the price on a spot market. And when we see negative funding, it basically means that shorts are the dominant, so they're the confident ones, and they're going to pay a little price to be short, right? In order to try to take out in order to leverage themselves, they're paying a fee for it. And since there's more shorts, they're going to pay the longs to hold the long position. You need both sides in a market, right? So bigger players will maybe take a long position while shorting in options, and they can capture the funding. There's a lot of interesting ways to use this in more complex mechanisms. But when the majority goes one way, they have to pay the opposition. So here the shorts are paying the longs, and if it flipped the other way, longs would be paying the shorts. So this kind of means this is pretty low funding. It's pretty close to zero. And that means there's not huge signals and confidence either way that it's going. And you can see the order book here, pretty even on both sides. And as we go back to Binance, you can also look at the trading data and kind of get a little bit more insights into what's going on there. But even as I go to the chart, I like to look at depth. This is the buying and selling walls. And you can see that there's a ton of buy pressure at half the price range here, right? In the $4.50. This thing would just be consumed. While selling is a very gentle upside. So it actually looks like 825 is in a pretty decent place, right? We don't see giant numbers either way. But all of this is to say, $8 looks like a pretty neutral place at present. It's not going to leap in one way or the other. Of course, indicators like code update, like very accessible, high utilization applications, this might change these valuations. So I'm not going to tell you how to trade. I'm trying to show you how to use the data to make your own decisions, to inform yourself, and what sort of tools are out there so that you can use the market to better say, hey, I really like this technology, but is it overpriced, right? What I'm trying to get you to understand is the pricing mechanisms, because I do think the technology is very interesting, it's very novel. With great marketing, that's fantastic. Now up only, maybe a little bit dangerous, but we're in a new world order here. And this is Berachain. It's been the first of the very large launches that we expect this year. So hopefully, again, bringing volume like that brings more interest, brings more capital. And what we really need is retail to come back. The markets are looking right now like the liquidity is all just kind of the same players, which means it's all the same money, right? And that's why we saw the Trump coin go up and everything go down. What we really want to see is new cash entering the ecosystem, growing the entire pot, and then we will get better responses from our altcoins and our positions. As always, none of this is financial advice, guys. I'm just trying to educate you. I might hold some of these assets that I talk about. I do not hold any Berachain, so I'm completely out of this. But what I do want to do is empower you with education. What does all this information mean? A little bit more about the blockchains themselves. That's really what I'm interested in. I think that as we move towards AI, we're getting into autonomous value creation, and participants are going to be able to earn off of that. So this is really the core of my show. And as always, guys, take what you can, do what you're going to do, make sure your decisions are your own, and do not trade off emotions. And good luck out there.